It's about that time of day again. Welcome to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, March 12th, 2015, 12th day of the month of March, year 2015. We are cruising through this second week of the month of March. Next week's quad witching. I'm going to be talking about that on Monday with you guys. But first, we have an exciting newsletter in store for you guys and gals this evening. How about some crude? Are we having fun yet? Please tell me somebody took that sell off the range expansion highs with us today. Crude oil, obviously bearish after giving us an incredible selling opportunity at the range expansion, $49 a barrel. Called it well ahead of time last night. Now, we see price is trading at new lows today, right? All the way down to 47. We talked about that last night too. But we have a measured move support level. And be careful, volume is not confirming this move into the closing bell today. So wise traders are going to be waiting patiently for some more selling opportunities after correction on Friday. There's a big trap waiting for you sellers on Friday. So make sure you stick around for crude oil towards the end of this newsletter. How about some gold? The yellow metal gold futures is bearish. Once again, gave you a great sell off those highs last night. I mean, you couldn't have scripted it any better on gold. Gold is bearish after collapsing off the range highs. We have targets waiting for us now at range lows, and wise traders will be selling resistance levels on Friday. We have a double whammy setting up right now on gold. Looking forward to giving you more information on that. And how about the Russell? What in the hell is going on with this Russell right now? Boy, that thing looked strong today. Very good example today on the Russell of how perky these U.S. equities are. Even the small caps getting involved today. Almost a 2% rebound on the Russell. So Russell is bullish after taking back all the losses from earlier this week. But you know what I'm going to say. The buyers held the pullback on the Russell, and that's what causes me to say we're bullish now. I'm going to show you an example of that in a second. We also have a ton of volume clues on that Russell, which tells us we are looking good here for the bulls to keep buying those pullbacks. But stay patient because we're overbought right now. I'm going to show you a chart on the Russell here before we wrap up. As you can see, we have a jam-packed newsletter chock full of trading opportunities for us tomorrow. But before we begin, you know me. Before we begin, I want to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why it is in your best interest to come over here and watch this video at sidewaysmarkets.com. First of all, you can download all the charts. Download all those charts. All the charts I'm going to go over with you guys and gals tonight, you can download all of them by following that link right below the video. How about a free pass to attend our trade room? Absolutely, you got it. Upper left-hand corner, we have a free pass. If you're not a member of School of Trade and you're curious what it feels like to be a member, how do we use these newsletter charts every day in our live trade room? What does it feel like to be there? Right? I have a free pass for you as a guest to come out and test drive our live trade room. And of course, last but not least, we have a specific mailing list just for our nightly newsletter. That's right. You never have to worry about missing another newsletter ever again. All I need is your name and your email address, and I'll shoot you an email every evening right around 8 p.m. Eastern Time when this newsletter is ready to be consumed. All righty? Now, guys, if you grab your free pass, if you register for the newsletter list, make sure you check your inbox, your outbox, your spam box, your junk box, whatever the heck boxes you got over there on your email, and grab the verification email that I send you, all right? That way I can make sure I get the right email address to keep sending them to you in the future. This is going to be a doozy. We got a bit of a humdinger here for you guys tonight. We got some rollover talk. We got some gold talk. We got some everything going on. Let's start with the funny yellow metal gold futures. So again, gold just a little bit bearish here. We nailed that sell all the way up and all the way back down. And of course, gold collapsing off the range highs. We have targets waiting for us to the downside. And of course, measured move target, going to be the easy one on our radar right now. And if we happen to really slip and fall here, may not be tomorrow. We may not get this until later on this month, probably next week. But 1136.5 looking good here. Guys, we're not going to have to deal with rollover on gold until the end of the month. So no worries about rollover on gold. Had a couple of questions about that come in. No worries on rollover till the 31st of the month. Probably 1st of April, we'll see the rollover on gold. If we go higher here, and I would expect us to go higher here, if we go higher here, you've got some selling opportunities waiting for you overhead, and it definitely looks like we have a short-term channel that is forming now, and this is where we're going to set up the double whammy. Here we are in a long-term channel, okay, long-term channel. Notice we've broken the highs of that channel, and the sellers held. So that means we should see this price come right back down to that range target there, 46.8. I mean, it's almost a certainty that we get to 46.8. Whether or not we go up and then down to it, that is to be determined. But 46.8 looks to be almost a guarantee. I hate saying the word guarantee because it's really nothing guaranteed in this world. Who the hell knows where this thing's going to go tomorrow? But we do know, though, that as it goes higher here, we're looking to sell short, and I've got my targets waiting for me here. Smart traders on gold are definitely looking for selling opportunities here still. Just be careful trying to sell the lows here. Wait to sell at resistance. Sell at the highs, right? Sell at a premium price. Now, let's dig in a little bit closer because I want to show you this double whammy. You can't see it on this chart, and this is a really good example of why we use different types of charts. This is a range-based chart, right? You'll notice every candlestick is the same size, right? You know, I got some wicks in there. It's a custom developed candlestick type we call JJ bars. It's kind of a hybrid between range and Renko candles. And it makes it really easy to see ranges, patterns, all of these most obvious things. But with that convenience, we lose a little bit of information. And just like my buddy Steve Nissen, right, who wrote that great book on the Japanese candlestick reading techniques, right? Pick it up at your local Amazon store. It's very much worth your read. I can give you a reference on it if you'd like. Just shoot me an email, jj@SchoolOfTrade. We know that we lose a lot of information by not getting the open, high, low, close information. So go to the tick chart now, and here's where we start to get a little bit more information. Man, probably a lot more information. And you can see on this chart, here's where we have the double whammy. All right, so gold is bearish. Follow the bouncing ball here, right? We got the major channel break up top, right? Here's that major channel break, right? So gold is bearish, coming off those highs. Very strange that we couldn't quite get all the way back down to that low. You'll notice we actually never tested that 47.3. I'm going to call it close enough, right, for target purposes. Missed it by 2 ticks from last night's newsletter. I guess I can't be perfect. We have a double whammy because we have the long-term major channel broken, and then again, the benefit of these tick charts, now we can see between the lines here. We don't need to be as broad, kind of a brushstroke there. We can really hone in now on these highs and on these lows, and you can see now there's a short-term channel and a break of the minor channel. Now, look what happens here. Fractal tendencies of the markets, right? Big channels get broken into small channels. Small channels get broken into even smaller channels, right? I'm sure there's even a small micro channel, right, hidden inside here as well. So this is what we mean when we say the fractal properties or the fractal tendencies of the markets, right? It's a beautiful thing. Chaos theory. So we know we have the major channel break. Now's the minor channel break. Okay, this should all be now coming down here as well. Again, whether or not it just goes straight down or whether it goes up and then comes back down, but we do expect this market here, because we've had sellers commit from the major channel, we should, it just be a matter of time before these sellers commit for the minor channel. Look for those selling opportunities as we go higher, and then I would definitely, as we go lower here, guys, look for an ABCD. Okay, if you're a member of mine, you know exactly what I'm talking about. If you're not a member of mine, why aren't you a member, right? Come out and see me. I'll teach you all this stuff. That way you don't need to rely on me. You'll know this exactly like I do. But bottom line is, though, when we do come back down here, look for an ABCD, right? ABCD, basically just another term for a measured move. Okay, but it's going to start probably once we start coming down, right? So A, B, C, D, measured move, and that'll be your target. I can't really project it out for you right now because I don't know how high we're going to go, but definitely look to measure that measured move out, A, B, C, D on the way down. And of course, we've got this low of that bear channel. I don't think we get there tomorrow, but hey, I mean, heck, we went, what, $15 today. We could do it again tomorrow. I don't see any reason why we can't. But probably not going to happen, though. But definitely look for those sellers to come in at resistance. And then as we go lower, right, A, B, C, D, and you'll know more tomorrow once you see a live chart here on the gold. All righty? Now, want to move to the Russell here right now. Don't forget, come see me tomorrow in the trade room on the gold if you need more real-time analysis on the Russell. Now, we've been talking about rollover, and you can see here, sorry about that, you can see here now, open up a little market analyzer here in NinjaTrader, and you can see the volume on this Russell is still trading that 315 contract. As you can see now, we're sharing volume here between the 615 and 315. The rest of these have already reset, so I can't really give you much more than that. In fact, you can see even the S&P here for tomorrow's volume, Globex volume, is still on the 315. So what I'm going to do is this. I'm going to give you both the 315 and the 615 charts for this evening. That way you have them ready. It's really difficult for me to speculate what this is going to be tomorrow, but bottom line is at about 8 a.m. tomorrow, okay, at 8 a.m. Eastern time on Friday morning, check the volume, or should I say compare the volume between the 0315 and the 0615 contract. Okay, if you see the 615 is higher volume, you're trading the 615 tomorrow morning. Okay, so I had to really, I was debating whether to go all to the 615 or all to the 315, so I said, you know what, I'm going to do half the chart on the 315, the other half in the 615. That way you've got it covered for tomorrow. The only difference is that the numbers will be a little bit different, right? You can see the difference here between the 315 and the 615, right? The 315 is priced a little bit higher right now than the 615. Okay, so you can see the prices will be a little bit different. It's about $5 off depending on which chart you're looking at. Let's start out first with the 615. Okay, here's a 615 contract. They're going to look very similar, guys. Okay, they're going to look very, very similar. The only difference that you can usually tell is on the right-hand side, the actual prices. So just be aware, again, my job is difficult trying to talk about what's going to happen tomorrow, right? I mean, think about it. The smartest minds in the world on television, all the news media, they can't do this, and I'm trying to do this 24 hours in advance. So it's a challenge to begin with. Having rollover involved right now really throws another ball in the air here. So I'm trying to do my best to give you guys some ammunition for tomorrow's session without just telling you just good luck. So Russell's bullish, clearly, and had a great question come in today in my afternoon trade room session with our guests about at what point do we know this Russell is bullish? Right? At what point do I now call this Russell bullish? And the point that we see is one right here and one right there. Ultimately, this one right here is what tells me we're bullish now. Now, if you've been watching my newsletter for a while, you've seen me do this many times before, and we call this the trend life cycle. The faster you learn this, the easier your job's going to be as a trader. As we're trending lower, trending lower, trending lower, we have, of course, lower lows and lower highs. Then we go sideways, right? Remember, this is where we found ourselves last night. Going sideways yesterday, we have the bears in control. The bears are still in control as of yesterday. What happens now is price jumps out, breaks out to the highs. I am not a bull at that point. I mean, how many times do we have to see this thing come right back down? I mean, heck, we did it on gold last night. We did it on crude last night. The Russell just kept on going, right? So that's the one of the three that we didn't get the collapse from last night's newsletter. So when do we become bullish? Because as of right now, I am still going to err on the side of caution. Well, you'll hear me say quite a bit, and if you've heard my newsletter for the last few years, you've heard me say, give the trend the benefit of the doubt. Don't just bail on those sellers. That's exactly what the sellers want you to do, right? They want you to try to buy this sucker so it can come crumbling back down. When you're getting stopped out of your long, the sellers are getting filled in their profit targets. So when do we become a bull then, Joe? We become a bull after we pull back and hold the pullback. Okay? So we saw that twice there in the Russell. The first one, okay, it was a real small pullback today. The first one was really small. The second one, though, definitely impressive. The second one was definitely impressive. And it really just kind of solidified the fact that the U.S. equities are hot, hot, hot. I'll tell you. Blame it on daylight savings time, blame it on, I honestly do truly believe that this whole pullback came off of the NASDAQ hitting 5,000. I mean, that just ripped open a bunch of wounds from 15 years ago. You know there are traders who lost their life savings in that dot-com bubble burst back 15 years ago. And, when I heard 5,000, I said, ooh, this is going to get ugly at these highs. Because traders do crazy things when they're forced to think about prior bad experiences, right? Our current mindset is a result of every past experience, whether we like it or not. And that was my theory on why price came off those highs here. It was due for a profit-taking session. It was due for a correction a little bit, and that 5,000 in the NASDAQ is definitely what I think spurred it. So now that we have that hold of the pullback, now we start, right, again, drawing up the trend here, wait for it to go sideways, right, break down. It's not a bear yet because it could keep going, right? I don't call it a bearish market until it breaks down and the retracement now holds, right? That's when I turn into a bear, when the retracement holds, just like over here when the pullbacks hold. Okay, it's called the trend life cycle, right? My good buddy Richard Wyckoff taught me that one a long, long time ago. So now you can see, and I mean, look at it. It doesn't lie. Right? It doesn't lie. You can see it's very obvious. And this is just one of thousands of examples we've seen on this on my newsletter over the past 10 years. We got the bear channel down, sell, 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 right? Had a great week selling the highs on the Russell. We based out, right? Profit taking, bargain hunting, whatever the case may be. Maybe it's a big round number. Maybe it's the weather. Who the hell cares? It doesn't matter why. All that matters is where and when. And so we base out here. We jump up. I'm still a bear. I'm still a bear. I'm still a bear until now, right? That's when I start thinking, okay, they held it right there. That's okay. Let's see them get through this, though. Let's see them get through there. And look what happened. They blew right through it, and just to throw it right in the face of the sellers, they pulled right back to that prior resistance. And see ya, suckers. And what really impressed me was look at the volume down at the lows here. Look at the volume. Now, this volume under normal conditions would be like, whew, that's pretty impressive. But we dealing with rollover right now. This is the 615 contract. So a little bit of this volume is probably just traders bailing on their 315 and initiating the buys on the 615. So volume is confirming, but again, I'm going to be a little bit suspicious of this because of the rollover. Rollover it's not a big deal, but this is one of those examples where it is a big deal, right? You can kind of put yourself other traders' shoes. They're moving their positions from the 3 to the 6. And that would result, of course, in extra volume. I mean, it lines up right at these highs, though. So bottom line right now is buyers held on the pullback, volume confirmation, so-so. But hey, we still have some good volume confirmation there, so there's no reason to think that we won't keep pushing higher. What you got to be careful with right now, though, is don't gamble. Do not gamble with that money tomorrow. Wait for price to pull back. And you can see here, A, B, C, D, right? There's a measured move there, A, B, C, D. A, B, C, D. So you got a bunch of reasons here to wait for a pullback, and you're going to see a lot of resistance up here at this 1238, 1239 area. So I would be very, very careful buying back up at those highs of that range here. All right, guys. Now, if we do happen to collapse, so this is one thing you've got to be aware of for tomorrow. When we pull back on this with such a big move in one day, you have to be thinking bullish, but just give them a little bit of wiggle room. And if they fail, you got to be thinking profit taking. And on that pullback, here's what I've been looking for. I've been looking for it to bounce. And if it fails, you've got targets waiting for you here, here, here. And boy, I don't think we go all the way back to where we came from, but that will be the juicy target all the way back down. If we do collapse tomorrow, you can expect it coming right back to the trading range that we started this process from. So if we do collapse, I don't expect it, but if it happens, right? Remember, anything can happen these days. Be prepared. We're going to buy that pullback here. And when I say buy the pullback, remember, I'm not blindly buying it. I'm waiting for a proper entry trigger. If you don't know the entry trigger, you got to come out and see us and learn how to do this the right way. So what I'll be looking for is a real sloppy failure here from these buyers. and then I get the entry trigger to the downside, big, fat, juicy red candle, and we'll look for the sells. Again, that'll be secondary. We definitely can see the bulls here, though, of taking control of this market. No surprise there. U.S. equities are the only game in town across the globe right now. So that's the 615 contract for tomorrow. Remember, check the volume. And this will most likely be almost the exact same chart on a 315. And then if we do need the 315 contract tomorrow, okay, if we haven't rolled over on the to the 615 contract, here is the 315 just in case you need it for tomorrow. Okay, Russell price action is bullish. Very, very important here. We see a long-term channel, a multi-tiered channel. So first of all, that's going to be a great target for you. Okay, so channel target. Then you also see this trading range. Now, what's the trick to finding a trading range? A flat moving average, right? You'll notice I really don't even use this moving average for anything more than just when it flattens out, right? When it flattens out, that gives me the clue. Mark the high, mark the low, copy and paste, copy and paste, copy and paste. It's easy, right? I don't need some expensive software to do this, guys. I just need knowledge. It's pretty simple stuff. And if you've been watching my newsletter for the past 10 years, you've seen how incredibly well it has worked for us. So keep it simple, right? That's the way you can make the easiest money, right? And with the self-fulfilling prophecy, remember, keeping it simple means other traders can find it too. You do all this crazy stuff with all this volume profiling and XWAP and Delta WAPs and how does anybody else know what's going on, right? You're the only person finding that level in the world. No wonder it doesn't work very well, right? I want everybody to be trading the same levels as me. That way I've got the self-fulfilling prophecy. So range expansion target, I would imagine you're going to get some resistance there. And then, of course, you double it up and you've got the 12.48.7. If we go on a run tomorrow, 48.7 is where we're going to. If we go on a nice big run tomorrow, 48.7 is where we're going to. The only thing I have to worry about right now is look where we are. At the highs, right? I can't tell you to buy right now. I can't tell you to buy. What I can do is tell you to wait for price to pull back and then buy. And of course, tomorrow in our trade room, we'll be finding new short-term levels to buy as it keeps going higher. Once again, though, I'm looking for a buy trigger on a pullback right now. But just remember, we had a big day today, almost 2 percentage points up here on the Russell. So that's a big day in one day. And you know there's going to be some profit taking at these highs. So look for the buyers to try, and then a big, fat, juicy candle right in the face of those buyers. And we'll sell it back into that trading range. You get the buyer failure targets listed for you below. Okay, so again, price goes up, pulls back, looking to be a buyer. If it fails, target. I don't think we go all the way back down, but that would be where you would expect it to go. So be careful buying these highs. And again, one more time, remember to check the volume tomorrow on this Russell. And if you need help, give us a call here. We'll be happy to help you guys. How about that crude? How about that crude wrapping up this second week with crude oil futures? I told you I got a humdinger here for you on crude. Do they still have humdingers? I think they do still have humdingers. I wonder what Webster says about a humdinger. What is a technical definition of a humdinger? Anyways, let's get back on track here, Joe. Don't quit your day job. Crude oil is bearish after giving us an incredible selling opportunity at this range. Here's an example of exactly what I was talking about. Right? Take that trading range. I mean, how much easier do you want this to be? It doesn't need to be, difficult, right? Take that trading range, copy and paste it. Yeah, you're right. I need complicated stuff to make money in any. Come on, this is easy stuff, right? Sell the highs of the range. Oh, and look what you see here. Okay, let's zoom in. Now, what am I talking about when I say buyers failing? Look, follow the bouncing ball. We go up. Pull back. We go up. We know we have range expansion resistance here. Now look what happens. Look. Pulls back. They try to go higher, and then, oops, they fail, right? That's it, right there. Right there. Think about it. Think about where the buyers would be getting in. They're going to buy in a pullback. Where are they going to buy in a pullback? Maybe a moving average, right? What did you do when you were a brand new trader? You were taught to buy the moving average pullback. So are everybody else. So again, we are expecting the sell, but we need proof. Anticipate, but always get proof. So we go up, pull back, successful, We called that last in the newsletter, right? Pullback, and then up. One more pullback. No, 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 no. And then once the stops get run, bam. You can see it. You can see it. You know where the stop's going to be. And if you don't know where the stop's going to be, call me. Let's work together. I'll teach you where all this stuff is. It's not difficult, but it's so simple that I think a lot of traders don't think it works, right? I don't need to have a million bells and whistles and flashing lights here, guys. I just need to think common sense, right? But eventually, I think, of course, these days, though, common sense ain't that common, is it? We all assume we need fancy computers and fancy bells and whistles and alarms firing off. All right, what are we doing here? So we got a bear channel. Big selling opportunity off the highs. We see price trading new lows, but we have a measured move support. Okay, measured move support, A, B, C, D, right? And we're kind of flirting around this measured move support area. So that should tell you right off the bat, be very careful being a seller right now. Your classic situation, you're in oversold territory. You should see profit taking. You should see bargain hunters. And then on top of that, you look down at the bottom here, tie together these lows, and you'll see volume. It's not pathetic, but it's definitely not confirming the move lower today. If you look closely too, the actual volume spike came on the profit taking when the price went back up. So it does look like people have exited the market here at those lows. We didn't get a higher volume print with that lower price. So I do not see volume confirming the lows. I do not see, I definitely see support here from the measured move support. And all of that is a good reason to be careful selling right now. I'm going to still look to get short. So what are we going to do? If price keeps going lower, then obviously we're selling retracements, and we have a few more targets to the downside that we can use here, right? So look for these targets to the downside if price keeps going lower. I just don't think it's going to keep going lower. It might, but it's usually not going to make it that stinking easy on us. So if it goes higher here, this is what I was talking about at the beginning of the newsletter. This reeks of a trap. Now, normally, I would tell you to sell this sucker, right? We'd call this a reversal line. We'd call this a breakout trap and a breakout retrace, right? I mean, this is one of our favorite breakout patterns of this trading range. But with that measured move so close and with the volume not confirming, I'll sleep a lot better tonight knowing that I told you just to be careful there at 47.32. 47.32, it's so easy. I just don't think they're going to make it that easy on us. So what I'll be doing is I'll be looking for this to be a trap. You know what's going to happen, right? Seller's going to take it. They're going to give you a little bit of wiggle room. They're going to go down a little bit just to get you guys excited about the sell. And then you know what's going to happen. Bam, trap, and then go lower. So again, be careful selling this 47.32. If you're really aggressive and you want to buy the failure, right? You could even buy it back into that range, but obviously you're going counter trend on that. So, make sure you wear your helmet if you're going to be a buyer on that tomorrow. But we got a couple trend lines here. You got a nice reversal line there. That'll make for a great spot after the trap. And then, of course, you got the range highs here. These are all excellent selling opportunities. But again, just watch out for that bear trap at 47.32. Maybe I'm wrong, but again, typically speaking, though, it's not going to go that easy on you where it goes right here to the tick and then goes lower. I wish it was that easy. Well, actually, I don't. If it was that easy, I wouldn't have a job, right? Computers would be doing all my work. It's the discretion that's involved that makes us that gives us the ability to make all the money that we do. Computers can't do it. The average person can't do it. Heck, even the smartest people in the world can't do what we do as traders, right? The sign, intelligence is not a sign of a successful trader. It's understanding the language of the markets, the crowd psychology that goes along with it. Remember, that's all the financial markets are. They're just one big group of people. So you got to understand that language they're speaking. All right, so this is my anchor chart for crude oil. And then we got one more chart here to finish up the week. This is a pretty interesting chart here. Here's my price action chart. The difference is this is a tick chart. You can see a lot more details in this chart. So what are we getting in the tick chart here to wrap things up? Crude oil price action is bearish. We see price at the lows of the major channel. So we're expecting profit taking by the sellers. And watch out, again, you see it again, for that bear trap 47.33, right? Just be careful with it. Just be careful. Again, coming off those lows, you know we're going to see price come up. They'll try to sell it lower, trap in those sellers, right? Run out those sellers, get the buyers back involved. And again, like I said, you could aggressively buy this on this bear trap, but wear your helmet, wear your mouth guard, make sure you bring a water bottle before you do it, because it's dangerous when you're buying in a downtrend, right? So if you want to be a buyer, wait for the sellers to try and fail. You can buy it. As you go back higher, though, be careful. There's a midline right here. See this little trend line here? You can't really see it, right? But there's a little trend line coming down here. This is the midline of this major channel. Now, for all the new traders out there, midlines are only important when they're used. You can see it has been used, it has been respected, it has been respected many times before. Midlines are only valuable if you see proof that they're valuable. Okay, kind of like a wick or a body of a candlestick. You only use the wick when it helps you. You only use the midline when it helps you. Okay, capiche? So we're looking to get short. We're expecting a trap here at the lows. If it doesn't trap and it goes without you, just find the next retracement and keep selling it, right? But at least you're prepared for that possible trap. I would be definitely expecting, though, price to wiggle its way back into this range, and you've got more selling opportunities right at these highs. I'm telling you guys right now, it's going to be really aggressive to get short on crude right now. This big down day here, 3% drop right all the way off those highs, right? So a $2 move down. So you're going to see some profit taking. Maybe I'm wrong. Maybe we just roll over and keep going. And if we do roll over and keep going, we trade, sell retracements, right? Sell the rips as it goes lower here. I just don't think it's going to be that easy on us. So expect price to go up, trap, and then come back down. If we don't get it to come back down, you can pretty much use this range from today or from 2 days ago, right? Don't be surprised here if it ends up sticking inside this range. It seems like that's a pretty healthy trading range. As you can see here, started here, range expansion, sold it back in, up, down, up, come back in, right? So it may end up just stuck in this range here as we go into the third weekend of the month. All right, guys? Guys, I want to thank you so much for being here. What an incredible week we've had. What an incredible week we've had. I mean, guys, if this stuff doesn't blow your hair back, you're in the wrong business. You're watching the wrong newsletter. Okay? This is what it feels like to be a trader. This is the good stuff. Proper analyzing the trend. Perfect failures, right? I mean, look it up here. This is so easy. Look at this right here. We knew we were looking for the sell off the highs, right? So like I said last night, you can wait for the reversal, or you can, of course, take it, sell after the reversal. But you can see it a mile away, right? The buyers tried, and then you know where their stops are going to be. See ya, suckers. It's so simple that people assume it won't work. Well, as you can see on my newsletter, we prove every single evening, and we do it without the benefit of hindsight, right? We do it for tomorrow. That's how simple this stuff really works. It's really fantastic. This stuff always gives me goosebumps when I take a look at this stuff. So guys, have a great Friday. Okay, last newsletter for me this week. I'll be back. I'm only going to be here for the first 2 days of next week. Next week is quad witching. Just to give you guys a heads up, I'll talk about quad witching week next week when we get there. Be well out there, right? Be well out there. Be safe tomorrow. It's a Friday. Don't gamble your money away. Right? Be professionals, run like a business. And remember, guys, grab your charts, grab those charts, grab your free pass, register for the newsletter mailing list. And if you happen to have some time here, head on over here to SchoolOfTrade.com, register for our free trial. You're going to learn more with me for 1 week at the discounted price of $3.99. You'll learn more with me in a week-long trial than you've learned anywhere else on the internet. I can pretty much guarantee you that. I've got 3 levels of membership here at School of Trade, beginner, intermediate, and advanced. That way everyone has a place to be a part of our community. And don't forget, we got someone standing by here 24/7, 365 to help you guys out. Woo! What a crazy week. You guys get out of here. Rest up tonight. Big day tomorrow. Wrapping up this second week of the month. Be well. Be nice to each other. And be here to see me tomorrow, 8 a.m. Eastern time, opening that trade room up. Guys, keep in touch. Drop me a line, JJ at School of Trade. What do you think about my newsletter? Post a comment below the video. Give me some likes on YouTube, whatever the heck you guys do out there. Give me your feedback. I appreciate it. We'll see you guys tomorrow. Adios, amigos. Bye for now.